Hey everybody, and welcome to Project Premium Harvest. My name is Matt. In today's video, I'm going to go over my account overview. I'm going to discuss my current strategy of all the different stocks I own and what I plan on doing with them in the future. I'm going to talk about my premium payments for the last 5 days in 2024. It's crazy that the year is pretty much over and what we're going to be looking forward to in 2025. So let's begin. As you guys know, the first thing I like to show is my account value to show my authenticity, right? So definitely took a little bit of a beating the last month of the year. In December, we had a specific dip in the market. I was heavily invested in a single stock, nvdy. My stop loss activated and lost a little bit of money, right? But still, if you look at the project holistically, I'm still up about $20,000 because I've paid back some of my heloc loan. So yeah, that's kind of cool. But going over the count, right, currently you guys can see I still do own 1,500 shares. So after it dipped, I did buy them on sale because I think I thought there was going to be a rebound, and it looks like that pretty much happened. So I basically bought, 1,500 shares, and I specifically bought the 1,500 shares to cover my heloc loan expenses and some of my margin expenses, right? To go with the 1,500 shares, usually nvdy pays about $1 per share. So that's going to cover like double the cost of my heloc loan. And that's pretty much what I plan on just paying back each month. I don't want to go too much over because I'd rather just invest that money into these income ETF stocks to make more money instead of paying back my heloc loan faster, right? But I do want to pay it off at some point. So 1,500 shares of nvdy is going to accomplish that goal. It's not going to be, it's only going to be pretty much $1,500 a month instead of like the $7,000, somewhere between $4,000 to like $8,000 I have been getting, right? So moving on to rdte, right? So I guess I'll speak to rdte and xdte. Before the last payment, I didn't think I was going to get an additional $30,000 into each fund before the ex-dividend and declaration day, but actually the numbers I gave you guys last week were incorrect. They're actually higher. And then once I get to my graphs, I'll point out the differences, right? So I have about 1,380 shares of rdte and then about 1,150 shares of xdte. Moving on to amzp. So from the last video, I've acquired about 40,000 or about 1,200 shares of amzp. There was a dividend this specific month, and it was actually really high, which was almost like 0.75, so 75 cents per share. And then ymax, I have about 1,005 shares. I like ymax because if you look at the NAV erosion to how much premium it's paying, it's relatively on par, and I got them at a relatively good price. So I'm pretty happy and content with my ymax, 1,000 shares. And then jepi and jpix, they're definitely a smaller holding. I only have 36 shares and about 41 shares, but this is something I plan on adding to every single month with my distributions and things of that nature, right? They're not going to yield as much as an xdte, rdte, or an amzp. However, I do capture some of the market upsides a lot more effectively in these funds. So it's kind of like that balance, and I kind of have a tiered approach, right? So for my rdte, xdte, amzp, ymax, jepq, and jpix, I call them my core foundational holdings. I'm going to keep reinvesting into these funds. The more money I make, the more money that I can borrow against. And so eventually I will get to my goal of $10,000 a month, just passive, and then on top of the different trades I'm making here and there, right? And then ulty is definitely, I bought this on ex-dividend day at about $9.35. It's definitely gone down a little bit, but I still have about 3 more weeks for this stock to appreciate. If it doesn't appreciate up until 35 cents, I'm probably going to have to sell at a loss because I'm not going to take an ex-dividend from ulty, and then it's going to drop into the $8 range. Not looking to do that, so I'd rather take a loss in that regard. But ideally, this goes above $9.35. Let's actually see what my cost average is. Yep, about $9.35. So if it goes up past that point, whatever it is, sometime near declaration date and the ex-dividend date for week 3 of January, I'm probably going to sell out, hopefully at a profit, but that's kind of the plan for those stocks. And now let's look at the different numbers and graphs and payouts. All right, guys. So for my last week of December payments for the core foundational holdings weekly payout, I made about $2,227.73. Not making a single trade. This was just passive income from my xdte, rdte, amzp, ymax, and yeah, and then I'm going to break down the numbers here in a moment. Then for the account totals, this number here is definitely has grown a little bit from 138,000 to 176,000. This is just me purchasing more amzp shares. And now from here on out, I don't plan on putting in any more margin into purchasing these shares. And you can also notice a discrepancy of what I was showing on Robinhood to what you're seeing on this spreadsheet. So Robinhood is if I sold everything right now, that's how much I'm going to have on hand. But then if you look at the account value of the shares I'm holding, it's actually worth $176,834.65. So the reason why I'm tracking this stuff weekly and month, I'm going to create a monthly and then a yearly trackers because I plan on having this project run quite some time, is so that I can see, okay, are these funds actually maintaining their NAV? If it stays at, $176,000, but then I'm also making, thousands of dollars in premium every single month, I definitely think that's a win. Ideally, I'd want to see this $176,000 go up, but as long as I can stay the same, keep cashing in premium, it's really what I'm looking for. So now let's talk about the individual holdings and how much I made per fund. The account value for xdte is about $58,184. And with a $58,000 account, every single week, I'm netting somewhere between $694 and $726 these last 2 weeks. These last 2 weeks were extraordinarily high. I definitely think that xdte was trying to give a higher premiums to become a little more tax advantage. And they were trying to get that share price closer to $50 a share. So that was kind of my thought process as to why these distributions were a lot higher than usual. Usually they hover around somewhere between 15 cents and 30 cents. But the last 2 weeks they were 60 cents or above. So that was kind of the thought process behind that. Moving on to the next fund. And the next fund is rdte. The weekly value of it was $57,000. Definitely went down $300 in the last week. I also haven't received my payments for these funds today yet. Sometime today and then Monday they'll hit, so my account will be a little bit higher. But then with that being said, for a $57,000 account in rdte, your weekly premium payment is going to be somewhere around $377.25. Pretty much standard. rdte was pretty consistent the last 3 weeks. They didn't appear to give more premium to become more tax advantage. Now let's go to my ymax holding. So ymax, scroll down here. So for my ymax holding, last week the value was at $18,196. Currently this week it's at $18,310. So it actually went up, which is quite awesome. Usually YieldMax doesn't do it, but I definitely like ymax over most of the YieldMax funds. Over ulty, I only jumped into ulty so that I can make some money off of its upside, but who knows if that's going to happen. More to follow on that later. And then for the last week of ulty, the distribution was pretty high. It was about 24 cents, which is about the average of what ymax is supposed to pay. Hopefully I wasn't saying ulty. What ymax is supposed to pay, and then I'm bagging in about $256.28. All right, guys, so that wraps up this specific video. We talked about a lot of great things over here. We talked about what my account looks like, how much it was beaten up over the last couple of weeks. Talked about my premium payments for this week. Talked about some of the strategies I'm employing. So my thought process for 2025 is I definitely want to pull out of more of the single stock income ETFs like nvdy and just some of the other ones I've been eyeing. I'm not really going to invest in them with the intent to buy and hold. The only reason why I'm holding the 1,500 shares of nvdy is because once I sold my stop loss and then I bought at a better price, I'm just using it to pay back some of my loans and some of the margin costs for this project. Outside of that, my core foundational holdings, like my Roundhill payers, my ymax, and then my jepq and jpix, those are going to be what's going to be producing my income consistently every single month and every single week. And I plan on just reinvesting all of my dividends back into it. When it comes to my ulty play, not reinvesting any of the dividends. What I make from those the selling of ulty, I'm going to throw into my core foundational holdings, because the intent here is long term. I want to invest into funds that aren't going to NAV erode, and then when they pay you a distribution, you get to keep the distribution. You're not going to have to pay some of it back to reinvest to maintain your balance, right? That's kind of the thought process. Let me know what you guys think in the comment sections. I read every single one, like, heart them. But yeah, guys, have fun out there. Enjoy your journey. Peace out.